Thank you, everybody, for taking an hour out of your day to join us to learn about our favorite topic, taxes. I've been with CPG a little over 10 years, and I consider myself to be a resource to you so that at any point when you have questions of a financial nature, you can contact myself and we could have a conversation, and hopefully I'll be able to help you. And I'd like to turn this over then to Dolly.
Yes, good afternoon, everyone, and thank you for attending. Once again, my name is Dolly Rios. I'm a New York State CPA, and I have been practicing accounting for over 25 years. And I'm also a resource to you as I answer the tax hotline of the Church Pension Group. So if you do have tax questions in English or Spanish, I'm available to answer those for you whenever you have them. Thank you so much for being here.
Next slide, please. So it's important for ordained clergy to understand that they have two tax statuses. Some of the income you would receive while working, you're considered an employee getting a W-2, and some of the income you're receiving would be self-employed. Since most of the clerics on this webinar are retired, we don't really need to dive any deeper than that, but if you are working in retirement, doing part-time work, then that dual tax status does come into play. So you would need to become familiar with how that income would be taxed, either as an employee or self-employed. Okay, next slide, please. So again, federal income tax is typically paid but not required by your employer, and that pays for general government services like the post office and the Department of Defense and Environmental Protection Agency. And then the self-employment contribution, SECA, is what you pay on your housing allowance number, and that goes what pays for Social Security and Medicare. But again, if you're just getting a 1099-R from us, which is the IRS form to show a pension, you don't have to worry too much about this. But it's just good for background, especially if you're doing any kind of part-time work in retirement. Next slide. So income while working, if you came out of retirement to start working inside the church, I hope you're familiar with what those rules are, because there are, if you are retired from the Episcopal Church and then you want to work inside the church and you make a certain amount of money, there are rules about that. But basically, your income would be your cash, any certain benefits, and other money you might earn through consulting or counseling and that sort of stuff. What would be taxed as the SECA if you are working in retirement would be the federal tax earned income and the housing allowance exclusion. Okay. So we do have our tax documents on the website that go into a deeper dive about this and do give specific examples, but this is like a top level kind of summary. Next slide. Excuse me. For federal taxes, housing allowance exclusion, when you are working, you have to come up with 3 ways to calculate your housing allowance. When you are retired and there's no longer a vestry, you still need to come up with 2 ways to calculate your housing allowance. The actual dollars you spent, keeping up your private home, or the fair market rental value furnished plus utilities. And whichever one of those 2 numbers is lower, that's the one you need to use on your tax return, and that's an IRS thing. If you are working and you're living in church provide housing, then the fair market rental value, housing as furnished with utilities, is paid by the church. So there's lots of different twists and turns because you may be eligible for other exclusions. And that's why we always encourage you to work with a tax professional who is comfortable with clergy taxes so that you take advantage of the benefits available to you and you don't leave money on the table or pay more taxes than you should have. Next slide, please. Interim position. Interim would be an indefinite period that lasts for more than 1 day, more than 1 year, even if it's 1 day, and it results in relocation. So if you do relocate for a job that lasts for more than 1 year, that's considered your primary residence. And that's an IRS thing. That's not a CPG thing. Okay, so that's important. And you can go ahead, next slide. But if you're working for an indefinite period and move for less than 1 year, the IRS states that your original home is your primary residence for determining housing allowance, and any costs or housing for that job can be considered a business expense, typically through a reimbursable business account expense. Okie dokie. Dolly?
All right. So in retirement, as Larry just mentioned, the part that you can exclude as housing allowance is the lower of your actual cash spent, or the fair rent. Remember, the lowest of the cash that you spent or the fair rental value of your home as furnished plus utilities, or the declared housing allowance, which in retirement, the declared housing allowance is what's your pension, basically. That would be the declared housing allowance. And any RSVP withdrawal that you take, if you choose to take the distribution, which is eligible for the housing, but if you choose to designate it as housing, that would also be part of that calculation. Just remember, we're going to go through an example too, so that you can understand how it works. If church-related income during retirement obtain, okay, so if you do supply work and you receive some sort of a compensation, you need to obtain a separate housing allowance from those type of employers where you're doing the supply work. Next slide, please. Okay, so we're going to go over an example of what does it mean to, how do I apply the housing allowance when I'm retired? So in this example, we have Mr. Smith, Reverend Smith, receiving a pension from CPG or from the church pension fund of $20,000. In addition to that, he took a withdrawal of $5,000. So total amount taken, $25,000. Then the calculation of his housing allowance is right below. So we have the three numbers here. We have the actual cost of maintaining a home, which is $21,600. Then we have the fair rental value of his home as furnished plus utilities, $21,000. And we know that if we compare these two numbers, obviously the lowest amount is $21,000. Remembering that his pension is $20,000 and his RSVP withdrawal was $5,000. Next slide, please. So in that case, the addition of the pension and the RSVP withdrawal came up to $25,000, and the lower amount between the three amounts that we just compared was the $21,000. So in that case, we have, I would say we have $4,000 of taxable income. Why? Because we have the $20,000 from the pension, the $5,000 that we took from the RSVP, which was designated as housing by the cleric. Those two amounts minus the $21,000, which is the lowest of those, the amounts that we had in the previous slide. That means that in that case, that Mr. Smith will have to report $4,000 as taxable income, and that is how it works. It doesn't mean, and I want to emphasize this, that because the amounts are designated, that they are completely excluded from income. Some people say, oh, it was all designated, I don't have to worry, so all my housing expenses meet up that number. You have to go through the calculations to make sure that is the case. Otherwise, during an audit from the IRS, you might not pass. Next slide, please. So home office deduction, this would only apply for some of you if you're doing work, during retirement, part-time work. And if you have a little space in your home that you're using to do this type of work, again, remember that you have that dual status and you are considered self-employed for Social Security and Medicare purposes. Otherwise, if you are not doing any type of part-time work, this wouldn't apply to you. It would apply mainly to active clergy if they're, for their self-employment income. Next slide, please. Okay, tax resources. We have some tax resources available to you. Some of them are available at the CPG, or most of them are available at the cpg.org website. And currently we have the 2024 Clergy Tax Return Preparation Guide. At this point of the game, most of us are probably done with our 2023 returns unless we chose not to file by October 15. But the 2025 Clergy Tax Return Preparation Guide will be available at some point in January. We also have the 2024 federal reporting requirements for Episcopal institutions, and that is a great resource for employers. Employers should really get a hold of that publication and read it so that they can have good information about handling some of the, not the tax, but some of the items that have to do with employment and payments to different type of employees. Some of you have asked us if we could give you a recommendation as to where to find a tax advisor or accountant who understands ministers or clergy's taxation. My recommendation, as I said in the previous webinar, would be to your colleagues are a good resource. And if they don't have anybody or the person that they're dealing with is not taking any more clients, you can check your state society of CPAs, call the state society of the CPAs in your state, and they might have some advice as to where to find somebody who's well-versed in ministers and clergy taxes. And also it says here that you can consult with your diocesan financial officer. They might have some resources available to you. Next slide, please. Okay, and here are the resources that we have available to you. We have, obviously, if you have questions related to benefits, obviously Larry is a good resource. Client services is also a resource for you when you have questions about your benefits and your pension and your calculations, the numbers that go into that calculation. And the person who answers the tax hotline, and as it says here, I'm bilingual, so I'll be happy to answer your questions in both English and Spanish. And this little, scan here, Larry, do you want to go over that for a moment for these complimentary individual financial discussions? I don't know if Larry could hear me right now, but
Larry,
anyways.
Larry,
yes.
you're on mute.
I was just talking to myself. That's not fun. So that's a QR code. If you focus your camera to it, it'll take you to our website where you could sign up to have a financial conversation where you could bring your specific questions and anything else of a financial nature, and we could talk about it.
Good.
So we went through that pretty fast.
And the next slide would be the disclaimer. Oh, okay.
Yeah, so this disclaimer basically just says we're here to provide education, not any kind of advice. And if we misspoke about anything, the pension documents will override whatever we might have said wrong.